Hey traders, have you ever wondered why some stocks are winners and some stocks are losers? Well, today we're going to dive into the personality of various stocks and compare why some are winners and some are losers. But first, let's jump over and answer the question of why is Google beating the snot out of Amazon? Hey, let's take a look at this. This is a chart from the leaderboard on Investor Business Daily. Notice what's happening. It is up to date. And as you can see, Google is breaking out to new highs. Look at the relative strength is heading up. And look at all the green. Let's blow that up. When you come over and look at the composites and all the information on the fundamentals, looking pretty good. Note a couple of things here is the industry group is 65th out of 197. The group itself has a B plus rating. Ah, and what else can we pick up from this? Oh, a couple other things. The accumulation distribution, C, means that people are buying. And what I really like, the up down ratio right here is a 2, which means that it's being accumulated. I won't say twice as fast as the other stocks, but it is basically being bought up. So what do we see on the chart here? Yeah, I'm not going to buy Google. I mean, in fact, we did have Google on our list. We bought it a couple of weeks ago on a pullback into this area here. And now we're just riding along for the ride with Google. I'd love to add more to it now that the market is back in. Take a full position. I'd love to add a full position on Google. The other reasons why I like Google and would like to have more of it is a leader. It is basically heading up, and it's a great stock to be building your portfolio on. So that's what we've got going with Google. We'll come back a little bit later and talk about why Amazon is getting the snot beat out of it. Today, I'm taking a look at contrasting both stocks and industry groups, the weakest and the strongest. So let's go ahead and jump over into and take a look at what the heck the stocks are doing. First up, we're going to analyze the S&P. The S&P has been performing fairly well. However, what are we seeing here on the S&P that should it give us concern, or are we just setting up for a potential pullback? That's the big question we have. Yesterday we had a quasi shooting star type of pattern. Let me shrink this down a little bit. Not quite a shooting star. Why is that not a shooting star? That is not a shooting star because the wick on top is not 2 times the size of the body. That's the bottom line, why it's not a shooting star. However, I'm looking now for a pullback on the spiders to actually pull back probably to the 8-day moving average. Or if we get a really more significant pullback, watch for it to pull back to the 8-week moving average. But remember, the 8-week moving average will be about 516 next week. So that would be a pullback of approximately 2%. What's a deeper pullback? Well, a deeper pullback, get it down to, if we get back to these past, where it got down to before, that's about a 6% pullback, well within reason. A couple of things to take away from this chart. One, we are pushing up to new highs on the weekly chart. However, what's going on with our momentum? As you can see down here, the momentum is showing a negative divergence, new high, not a new high. What about over here on the weekly chart? Not really. We really can't tell anything. I'm going to expand the weekly chart, just take it back just a taste. And as you can see, yeah, doesn't apply over here on the daily chart. So I'll be looking for initially just a pullback back into around the 8. The 8 is right in this gap right here. So that would be an approximately good place for it to pull back to. What about our next entity, which is the Russell? Okay, the Russell, similar type situation. Now, the Russell does have a bearish reversal signal as of 3 days ago. We have a hanging man. And the hanging man basically is a hammer, but it's at the wrong end of a trend. And so therefore it's called a hanging man. What am I looking for this to do though? Well, one is probably just a pullback since I'm above all the moving averages, as you see here. There's the 8, there's the 50, there's the 34, and of course the 200 is way down here. The small caps have finally gotten themselves into where they are taking on. Look for a pullback back to the 8, or this uptrend line would be another place that it could pull back to. We need to pull back. That way the momentum starts to rebuild. Now, right now, the momentum is kind of extended, allows the momentum to rebuild to get a running start to break through this level, which is this past high. And then that blue line up there is the all-time high. We would love to see that happen because that could spell good things for the small cap. As we go over to the Nasdaq, the Qs broke out. However, the momentum is extended. Another one of these situations where on the weekly chart, I now have a new high here, but not a new high here on the momentum on either of them. Now, we did get a breakout on RSI and everything. Negative divergence. What does that tell us? Okay, because we really haven't gotten a break to the downside. It just tells us to watch. You be careful. We have a two-line cluster in the upper level on the market forecast. However, that two-line cluster on the market forecast is not as meaningful as the one when it's on the bottom, when it's in the lower level down here. So in the Qs, what am I looking for? Looking for something very similar, looking for a pullback into the 8, which is going to be about there. If it breaks the 8, look for the pullback down to this other. Just draw that in there. There's a trend line that's about there, could bounce off of there. And also watch that 50-day moving average. Great moving averages to plan your trades off of. So that's what we've got going on with the Qs. If you are struggling with finding a great system to trade, the Autopilot trading system is for you. We've been operating for, gosh, the past 12, almost 13 years, and I have beat the S&P in the last 12 years. Was a really nice average return. I'll put a link down in the description, and I encourage you, come take a test drive. Come take a test drive, and I'll remind you, ask about the discount. You may qualify for a discount for the Autopilot premium service. Now that we've already looked at Google, let's review Amazon in just a moment. But first, let's discuss the inter-industry champion comparison, and that would be between two specific stocks that we all know very well. AMD was in the news today. Now, some people may want to jump right out there and buy, and this is advanced micro devices. However, do you really want to buy this? There's a couple of things that we want to be wondering about. Yes, this looks very positive from the aspect of we are building a nice little base right here on AMD. And you can see that up here. We are doing a consolidation. We pulled back to last support here, and we're getting a nice little bounce. On the weekly chart, the momentum is starting to shift up. That would lead us to believe that AMD could be shaping up to make a run all the way back up here to the 230, about approximately 230. How high is that? It's up at the maybe up to 215 level from where it's at right now. On the other side of that, though, is the question we have to ask ourselves that this could be shaping up into a excellent opportunity. However, we still have to keep in mind this. Let's go ahead and look at NVDA. NVDA is also, well, stronger stock, pushed up to the up, looking like a possible time for NVDA to actually be doing a correction. One high, two high, 3 high. What does that equate to? That equates to a potential triple top on the daily chart. On the weekly chart, we're looking at kind of a double top. And oftentimes with these topping type patterns, we will basically see a drop significantly, or that, at least that's where the high probability is. The one thing that is also of interest on the NVDA is we have earnings coming up on the 22nd. And so this earnings report right there on the 22nd, I would not want to be opening a new position in NVDA at this particular time. What does the leaderboard chart say about AMD? So immediately go over here and look at AMD. The red line is the 50-day moving average. It's failing at the 50-day moving average. That can be kind of typical of a stock that is showing weakness. Well, what about the composite? How does it look? One, composite 81. The group strength, though, is excellent. It's an A plus, and it's 15 out of 97. But take a look down here, accumulation distribution, E. That's means that people are actually selling it. Now, does that mean that this isn't going to turn out to be a good potential base right here? No, it doesn't mean that. It just means that those numbers need to start reversing and turning around. Look at the up down volume also. The up down volume right here is only a point 0.8 in its accumulation. And we already talked about the accumulation distribution being low. Now let's look at how it compares to NVIDIA. Now, of course, NVIDIA is the number one stock in this same industry group. Notice a much more spectacular 99 composite rating. Look down here, accumulation distribution. It's a C minus. It is being bought. The up down ratio is a 1.1, also being bought. However, what do I have showing up over here? I have kind of a cup and handle pattern. Let's take that away. And as you can see, price actions are coming down off of that potential triple top like we had seen previously. Let me go over and take a look at the weekly on this. And yeah, looking the same way. Another thing I want to note and identify, look at the relative strength. The relative strength on NVDA is heading that way. And it looks like it's pulling back into the trend line. What about the relative strength on AMD? Well, AMD, look at its relative strength line. It is pointed down. Now, it may be breaking out, and that would be a positive thing. However, it is still exceptionally low. This is the first time I've actually used these charts for demonstration purposes. Please let me know in the comments what your thoughts are about using this chart. Provides a little bit of additional information, and hopefully we can zip through our presentations much more quickly. Next up is, what about that comparison between Google that we saw earlier? Again, look at the relative strength going up. Look at the ratings, also looking pretty good. 80-65 on the industry group. And then what about Amazon? Amazon, as you can see, look at the relative strength is stalling out, and it looks like we're getting a double top to match this double top here, and we may drop relative strength on Amazon. Note, it's almost like at the midpoint, so it's not in your strongest potential performers. Blow that up a little bit. See, 88 and a B minus rather than a B plus on the group strength. And those issues can drive the success of a stock. Does it mean Amazon's a bad company? No, of course it doesn't mean that. It just means that it could be going through its cycle where it will now start going through the healing process where you pull back, rest, and then get ready to go again. So that's what we've got going with Amazon. Nice comparison between the two entities. Remember, all the materials presented are for training purposes. Traders should always paper trade Any new method prior to the risk of their own personal capital, past performance is not an indication or promise for future performance.